from the line of Harshit Sancheti from Renaissance Investment Managers. Please go ahead.
Sir, who are our top 5 customers, and can you break the revenue contribution made by each of them?
Yeah, our 65% business comes from corporates. Our top customers are Malabar Gold, Kalyan Jewellers, Joe Lucas, Senko Gold, Thangamay Jewelry, GRT Jewelry, Bima Jewelry. These are our customers. 65% comes from the top 15 corporates.
Okay. And for Malabar specifically?
Yeah, pardon?
How much percentage Malabar contributes?
Percentage we cannot reveal is for the secrecy. You are also from the jewelry industry, I hope, so you understand.
Okay. Okay, follow up on that. What are the steps being taken to reduce the dependency of top customers?
Dependency on? Can you repeat the question?
What are the steps being taken to reduce the dependency of these top customers?
We are not reducing this customer. We are expanding with the corporate, and we are with large corporate. So for reducing the dependency, we are with mid corporate also, which are at 5 to 10 stores. Which are planning to become like Malabar and Kalyan in 5 years. So we have onboarded that also. And the 2 to 5 stores, which have 2 to 5 stores in chain store in South or somebody, which are at lower level, but they have a plan to become mid corporate in 2 years. So we have diversified our sales in mid, small, and large corporates. So we are with everybody, and we are right now available in 2,000 to 3,000 stores in India and out of that. So our wallet share is increasing with each customer.
Okay, all my questions are answered. Thank you.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1. The next question is from the line of Piyush Jain, an individual investor. Please go ahead.
Hello. Hello.
Please go ahead, sir. You are audible.
Yeah, just want to know this transaction which we acquired at 2 companies, this is a related party transaction?
Karan, can you question once again?
I'm asking the two entities we acquired, this Star and Mangalsutra.
Yeah.
Are these a related party acquisition?
Yes. This is related party transaction.
Okay. So we haven't given this margin detail of this entity. We have given some turnover detail like 200 crore and 170 crore, but we haven't given how much EBITDA margin, how much...
Piyush, sir, sorry to interrupt. The line for you is not very clear. You're sounding muffled. May I request you to please use the handset mode?
Yeah. Now it's better?
It's slightly, sir. It's not really...
Can't hear you properly.
Yes, wait a minute. Yeah, now it's better?
A little better, sir. Please go ahead.
Yeah. So I want to know what is the EBITDA margin these two entities are making, because we are giving some guidance that the margin will improve going forward because of this.
EBITDA is around 4.4% in the last year. So we will improve that. And PAT is about 2% approx. And that.
Yeah. Okay. And previously we have discussed that we are trying to work with Tanishq. So any update on that?
Already we have done many rounds of meeting. Our product meetings is done, but we are waiting a confirmation all from them. So it's already we have last call already we told that we will be acquiring it soonly, but it's get delayed by 2-3 months. But we are hoping that we will onboard them in a shorter time. But it's their internal when the vendor window is open, then they will tell us. But we have done all the meetings and product meeting and with them. So let's hope we are tracking them. So, yet now we are not onboarded them.
Okay. And earlier we have given some guidance that we will move most of our borrowings to gold metal loan. So right now, what is progress has been achieved on this front, and how much is our borrowing in gold metal loan right now, and when we will be able to come at a 100% level of gold metal loan?
Already from our debt 5 to 6% has transferred to the 6-7% we have transferred to gold metal loan, which the KVB Bank has given us. In 2 quarters, I think we will be 100% on GML because banks are taking the time to change the limits. We are already pushing up them. for GML. Already one bank with major limit has already told us that in this week we will get about 70-80 crore GML loan. So I think this quarter we will be at already we are doing 7%. So 25% will be converted into GML this quarter, and I think 80% in second quarter. So we have applied to all the banks. This will help us to drop our interest costs in 2 quarters. So already we are using 7%. We have started using GML.
Okay. And sir, earlier we have given guidance of, I think, 5,000 crore revenue by FY26. Now I think we have upped the guidance on a higher side, around 6,300 we are paying, correct?
Yeah. With this acquisition.
With this acquisition, correct. So the growth which we are forecasting is largely based on what? Based on the new product categories, new customers, or what? Because we would be catering most of the customers barring few tonnage for something. Otherwise, we are catering all the customers in the jewelry business. So whatever the growth number target we are thinking, it is purely based on the product change or new product introduction or something, on what we are seeing of this.
It's all blended. It's about market growth is happening, market share gains, and export we are working on it. All the blended it will come products. We are making new products that will help us to drive our market share. Already we have a data that all the retailers data. Mutira also told that unorganized market is shifting drastically to the organized market. That is helping us to give these projections because unorganized market is drastically shifting to organized market to our corporates. It's all about blended. Our products is also work. Market share, market growth is also working in it. Indian jewelry market is huge. We are just at 2,000 crore of revenue. So it's a huge market. Tanishq is already 8% of the revenue of the Indian organized market. So it's a huge opportunity. We are just at 2,000 crore. So our product is also working. Market share is shifting from unorganized to organized. Market is growing. So all will help us to drive. Government policies are good.
Okay. And 2 more questions last. First, to achieve this 6,300 crore revenue, do we need to raise further money going forward also with respect to dilution, or we will be able to manage our working capital with internal accruals and all? And second, you said something, let's say 750 kg per month capacity you have, and then you are acquiring 2 units which are also having around 200 kg. So right now we are doing a capacity utilization of 40%, 50%. So want to know what is stopping us right now to come to optimum utilization level of, let's say, 75% or 80%? Why we cannot do that in 1 year, next 1 year or something?
1 year, at present there is no need for external capital. We would take capital at the appropriate time that when our board is comfortable and agree the plan and we'll plan that out. About that to achieve the target, we have taken the capacity because it's a manufacturing capacity. You can not plan for 1 year. That 1 year we have taken this facility. Next year we can do. So we have to plan for 3 to 4 years. The capacity is done for 3 years, keeping in mind. So we have decent capital with our customers are good. So we are gradually growing by working capital loans is good for next 2 years. So we have products, but we cannot achieve this 3 year target. We cannot fully utilize in 1 year this facility. It's a step-by-step process and making the new products, adding slowly adding the karigars, so designers we already have. So this is the process of 3 years. We cannot step so drastically that we can take more capital and achieve in 1 year. So we are in a good space, I think.
Is there any other entity related party which is still there, technically doing business or?
Nothing.
Nothing. Okay. Thank you from my side. Thank you all the way.
Thank you. Participants who wish to ask questions may please press star and 1. The next question is from the line of Bharat Jenani from Money Control Pro. Please go ahead.
Yeah. Hello, sir. Am I audible?
Yeah, Bharat.
Yeah. Yes, sir. Congratulations for a great set of numbers. So, sir, just 2 questions from my side. One is you gave a revenue target of about 6,500 crore. So that is by FY27, 28 next year. What is the timeline for that?
27. We have revised the target with this acquisition. Earlier, our target was 5,000 crore for 27, but this acquisition, we have revised the target.
Okay. And so second question is related to this, the new segment that you pointed out, like, studded, diamond studded jewelry, which we have entered into last year. But sir, wanted to understand, like, because we, have been able to build the business with the focus on the lightweight jewelry. So our products like, necklaces, pendants now, Mangalsutra and chains, so that typically is outsourced by the jewelry, the retail jewelry manufacturers which are there to manufacturer like us. But diamond jewelry, the diamond studded jewelry typically, what do you think? Why will they outsource it to us? Because the other products that we mentioned, that are lightweight and that they are outsourcing, and we typically provide designs which they can sell fast. But what the USP of diamond studded jewelry is there, which we give to them, that that manufacturing will come to us rather than they manufacturing. And because I think that's a margin lucrative product. So instead of the jewelry manufacturer outsourcing, he'll make it in-house and then sell it. So probably, what I was trying to ask is where do you think is our USP in that segment?
Yeah. So I will answer this. Mostly this large corporate prefer to outsource diamond jewelry. 80% they are outsourcing because they get a creation from different 50 to 100 factories, different 50 mines come into a counter. So they largely believe that outsourcing is very good for us. We get a creation, we get a anomalous creation, future plans, future what jewelry will work. This manufacturer work day in, day out for this. For 20-25 years, every manufacturer is working for this, that what will work after 6 months, what will work after 2 years. So this large corporates every time are positive or look for outsourcing this diamond jewelry. Whatever margins there is running in the market, or they give to us also. But I will come to the point why our jewelry we will sell this diamond jewelry, because we have developed the same taste as per gold jewelry. We have created a lightweight carat diamond jewelry. So we have launched 0.2 carat to 0.5 carat rings and pendants and all. Our necklaces are range about 1 carat to 1.5 carat. So our diamond jewelry range is about 1 lakh to 2.5 lakhs range we are making. We are not making 5 lakhs, 10 lakhs jewelry or 15 lakhs jewelry. We are before also we were not in that mindset. In diamond jewelry also we are in the same line. We are making a budgeted lightweight jewelry. We also know that taste and their buying trends. This is that we global market trends are bringing it to India. So in global market trend also we are bringing it to India. So we are into a lower inventory budget. We will keep in that pace only. Large corporate every time sees new design, new creation, whichever will sell fast in the counter, they outsource from the manufacturer. So it's all about the designing, creation you make and the budget inventory you make. So we are into a small, very initial stage of diamond jewelry, not much aggressive. Very last quarterly we got some good sales. So we are slowly driving up that. That's the budget. Yeah.
Okay. So just one clarity, you mentioned what price range you are making, 1 to 2 lakhs or like?
Diamond jewelries all our diamond jewelries are ranging from approximately rings and earrings are about from 20,000 to 50,000, 60,000 range. Necklaces are about 50,000 to 1.5 lakh. So maximum 2.5 lakhs.
Okay. And so just last question from my side. The margins for the consolidated entity, you said what will be the PAT margin guidance over the next 3 years, and what will be the drivers for that?
For Sky Gold?
Yes, Sky Gold consolidated, including both the entities that we have.
Yeah, we are targeting 3% PAT margin to achieve. First target is to 3% PAT margins. And then we will go ahead with more than 3% also. 3 to 4% we are targeting. First to achieve 3% is our first target, which will help us by reducing the finance cost also. We are developing, we will be implementing ERP system which will help us to track the inventory and help us to lower the gold loss. So all the field we are working on it. To achieve first target is to achieve 3% PAT margins, but we are in 3 years we'll be ranging about 3 to 4%.
Okay, sir. Thanks and all the best for us. Thank you.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Amit Agicha from HG Hawa and Company. Please go ahead.
Good evening, sir. Congratulations for a very good set of numbers. My question was with respect to, like, is the company also dealing in B2C segment?
No, we are never into B2C. No.
Is the company planning to come out with B2C and online?
Right now, we are not planning because we are seeing a very good scope in B2B only. We have acquired two entity. The ROC of B2B is better than B2C for now. So we are considering we have acquired two entities. So our target is to become the largest jewelry manufacturer of India. That's our mission. So for 2 years, we are not planning at least for anything.
Okay, the company is not thinking of retailing.
No. So B2B, we are considering that is our core, and we want to be a largest manufacturer of India.
Okay. Thank you, sir.
Thank you. The next question is from the line of Raj Sangvi, an individual investor. Please go ahead.
Good evening, sir. Congratulations on a very good set of numbers. So my question was regarding to the sudden rise in the prices of gold in the month of April. And also there has been general election as well. So have you experienced any slowdown in the first few months of this quarter because of that?
There were expected slowdown was expected, but there was a good business because April, May, Akshaya Tritiya is lined up in the south and north. So Akshaya Tritiya is a very big opportunity. So it was a good quarter for us, I would say. Okay,
got it, sir. And my second question is with respect to our turnover. So we have guided for around 6,300 by FY27. So my question is, like how price increased in the month of April, suppose it increases further in the coming few years. So can our turnover even increase further because of that?
We have given a blended target already.
Okay, considering that. So the target is considering that.
Yeah, yearly 8 to 9% gold prices increases on average. The data says that. So we have calculated both the.
Perfect. Thank you. That's it.
Thank you. Ladies and gentlemen, to ask a question, you may please press star and 1 on your touchtone phones. The next question is from the line of Piyush Jain, an individual investor. Please go ahead.
Sir, a couple of questions from my side. Sir, we have some investments in our books also, correct? Some 90 odd crore, which was a listed share, sir, correct?
Yeah.
Correct. So what is the planning for this? Do you want to cut this and reduce our borrowing or something, or we want to continue with the borrowing as well as the investments?
I don't know. We are planning to replace this equities with FD with the banks. We have already applied to the banks that we want to replace this collateral with FD, and we'll lay off the shares. We'll upload the shares. So we will replace this with FD. Then FD will give us good returns, 8 to 7% fixed returns to us. So these are the collateral with the banks against which we have taken the limits borrowings. So in I think 1 quarter, in 3 months from here, we will be exchanging the limit with FD and we'll sell out the shares. Yeah.
So for GML also we need to give FD?
Yeah, we have to give 30-40% collateral to the banks for the secured loan.
Okay.
Against that we get 3 times loan.
Okay. And sir, with respect to our capex, let's say whatever capex we need to do, so our work is more like a skill work where the karigar is important and not about the plant and machinery something. That's why, because our capex and investment size is lower as compared to our turnover. That the understanding is correct?
Yeah,
we need space.
Yeah. Can I go ahead?
Yeah, sure.
So it's a mix of machine and handmade. It's a mix of machine made added, handmade. So in machine, jewelry is made by hand. It is carving is done, polishing, finishing. So it's a 50-50% combination of hand and machines. So in gold, it's not like that steel industry or something copper industry that a capex is needed of 50 crore, 100 crore, or 150 crore. So nominal capex is needed, and it's a blended of handmade and machine.
Okay. And I just want to understand whatever the way our pricing is largely being the making charges that we make, that is our revenue, because on a gold-wise, price-wise, whatever fluctuation happens in gold, that would be taken care by you hedge in the way the date at which you buy and the date at which you sell. So more or less that has been adjusted. So whatever is your making charges, whatever is your, let's say, gross margin, that should be our income. Is that understanding correct?
100%. That's gross margin is our income.
That's why we are able to make a high ROC.
Pardon?
That's why we are able to make high ROC.
Yeah.
Okay. Thank you.
Thank you. The next question is from the line of Amit Kumar. Please go ahead.
Yeah, thank you for the opportunity. Hello?
Hello.
Can you hear me, sir?
Yeah, brother.
Yes, congrats to the good set of numbers and a great vision. So, just wanted question that initially we guided about 10,000 crores of revenue by 2030. So, can we say we will be able to achieve maybe 1 year before, maybe 2029?
Yeah, 100%. With this acquisition, we are revising, but we have revised the target to 2027. We have given the outlook. So, it will be revised 100% with the acquisition.
No, I'm talking about a 10,000 target, 10,000 revenue.
Yeah, about
when will we be able to achieve, in which year we will be able to achieve 10,000 crore of revenue?
We have given the outlook of 2027. We'll definitely achieve before 1 or 2 years before only. But we'll send you the outlook till 2030 also. We can send you the outlook. We can send you the PPT. So 100% with this acquisition, which will be achieved prior.
Thank you very much, sir. Thank you. Thank you.
Thank you. We have the next question from the line of Bharat Jenani from Money Control Pro. Please go ahead.
Hello.
Yes, sorry, sir. The line for the current participant seems to have dropped. Ladies and gentlemen, in the interest of time, that would be the last question. I would now like to hand the conference over to Mr. Mangesh Chauhan for closing remarks. Over to you, sir.
Thank you so much. Thank you everyone for joining us. I hope we have been able to answer all the queries. In case you require any further details, you may please contact us or Orient Capital, our investor relation partners. Thank you so much. Thank you all of you for supporting us. Thank you.
Thank you. On behalf of Sky Gold Ltd, that concludes this conference.